Welcome to the world of property investment in South Africa, where opportunities abound and strategies vary as much as the country's landscapes and its people. In this short video, we'll explore the top 15 property investment strategies tailored to the South African market. Hello everyone, and welcome to the EDPF Academy, your guide to unlocking the potential of property investment in South Africa. Let's dive straight into some of the top 15 strategies that we have chosen for you today. Strategy number 1: Buy-to-let properties. Buy-to-let is the purchase of residential properties with the intention of renting them out for monthly income. In this strategy, you want to choose high-demand areas with steady rental yields for maximum returns. Buy-to-let properties involve acquiring residential real estate with the primary goal of generating rental income. Investors typically seek properties in areas with high demand for rentals, such as urban centers or near universities. It's essential to conduct thorough research on rental market trends, vacancy rates, and potential rental income to ensure profitability. Strategy 2: Retail property investment. Invest in commercial properties like retail spaces. High traffic areas and strategic tenant selection can lead to lucrative rental income and property appreciation. Retail property investment involves purchasing properties such as shopping centers, malls, or individual retail units. Location is crucial, as properties in high traffic areas tend to attract more tenants and customers. Selecting the right mix of tenants is essential for maintaining a vibrant retail environment and maximizing rental income. Diversifying tenants across industries can reduce risks associated with economic fluctuations. An example of this strategy is investing in a retail property located in a popular shopping district with a diverse range of tenants, including anchor stores, boutique shops, restaurants, and service providers. Strategy 3: Student accommodation. Target areas near universities and colleges. With a constant influx of students, there's a consistent demand for rental units, making it a stable investment option. Student accommodation investment involves purchasing properties near educational institutions to cater to the housing needs of students. The demand for student housing remains relatively stable, as there is a consistent influx of students seeking accommodation. Properties located within walking distance or with easy access to public transportation to campuses are highly desirable for students, ensuring high occupancy rates and steady rental income. Strategy 4: Flipping properties. Purchasing undervalued properties, renovating them, and selling them for a profit is one of the quickest ways to generate profits, but does carry significant risk if you cannot find a buyer quick enough. This strategy requires a keen eye for value and market trends. Flipping properties involves buying distressed or undervalued properties, renovating them to increase their market value, and then selling them for a profit within a relatively short period. Successful property flipping requires meticulous planning, budgeting, and project management skills to ensure that renovation costs don't exceed the expected increase in property value. An example of flipping is purchasing a rundown house in a desirable neighborhood, renovating it with modern finishes and amenities, and selling it at a higher price to first-time homebuyers or investors looking for turnkey properties. Strategy 5: Short-term rentals. Capitalize on the tourism industry by offering properties as short-term rentals through platforms like Airbnb. Flexibility and location are key to success. Short-term rentals involve leasing out properties to guests on a nightly or weekly basis, typically through online platforms like Airbnb or Booking.com. This strategy is popular in tourist destinations or areas with high demand for temporary accommodations. Providing attractive amenities, maintaining excellent guest communication, and ensuring the property's cleanliness are essential for maximizing occupancy rates and receiving positive reviews. Strategy 6: Affordable housing developments. For new investors, it is advisable to partner with developers to build affordable housing units. Government incentives and growing demand make this a socially impactful investment. Investing in affordable housing developments involves collaborating with developers to construct residential properties that cater to lower and middle income earners. Government subsidies such as the first-time finance product of the NHFC, tax incentives from SARS, and grants from government institutions may be available to support such projects. Affordable housing developments address the growing need for quality, affordable housing in South Africa's urban and peri-urban areas, contributing to social and economic development. Partnering with a developer to construct a mixed-income housing development, consisting of subsidized units for low-income families and market-rate units for middle-income earners, in a designated housing priority area is an example of an affordable housing investment. Strategy 7. Commercial property development. Invest in developing office buildings or industrial spaces. Strong economic growth areas offer opportunities for high rental returns. Commercial property development involves investing in the construction or renovation of office buildings, industrial warehouses, or mixed-use developments. These properties are leased to businesses for office space, manufacturing, or retail purposes. Location, accessibility, and economic indicators play a crucial role in determining the success of commercial property developments. Strategy 8. Real Estate Investment Trusts, or REITs for short. Diversify your portfolio by investing in REITs, which offer exposure to various property types without the hassle of property management. REITs are companies that own, operate, or finance income-generating real estate across various sectors, including residential, commercial, retail, and industrial properties. By investing in REITs, individuals can gain exposure to a diversified portfolio of real estate assets without directly owning or managing properties. REITs typically distribute a significant portion of their income to shareholders in the form of dividends, providing investors with a steady stream of passive income. Strategy 9. Fractional property investment. Pooling funds with other investors such as a stokvel to purchase properties as a collective. This allows for shared ownership and access to premium real estate. Fractional property investment enables multiple investors to collectively purchase shares or stakes in properties, such as rental units, commercial buildings, or vacation resorts. By pooling resources, investors can access real estate opportunities that would otherwise be financially out of reach. Fractional ownership also spreads the risks and costs associated with property ownership among multiple stakeholders. Strategy 10. Township development. Participate in the development of township infrastructure and housing projects. It's a way to contribute to community growth while generating profits. Township development involves investing in the planning, construction, and improvement of residential, commercial, and social infrastructure in historically disadvantaged areas known as townships. Investing in township development projects not only generates profits for investors but also contributes to socioeconomic upliftment, job creation, and community empowerment. Strategy 11. Mixed-use developments. Mixed-use developments integrate different types of land uses, such as residential, commercial, retail, and recreational spaces, within a single property or complex. Investing in mixed-use developments offers diversification, as revenues are generated from multiple sources. Additionally, these developments create vibrant, walkable communities that appeal to residents and tenants alike. Strategy 12. Land banking. Land banking involves acquiring parcels of undeveloped or underutilized land with the intention of holding them for future development or resale at a higher price. Successful land banking requires careful analysis of market trends, zoning regulations, infrastructure plans, and demographic shifts to identify areas with strong growth potential. Patience is key, as land banking is a long-term investment strategy. Strategy 13. Build to sell. Build to sell involves constructing residential or commercial properties with the primary objective of selling them to end users or investors once construction is complete. Timing the market and understanding demand dynamics are critical considerations in build-to-sell projects. Developers must monitor market trends, adjust project specifications accordingly, and optimize pricing strategies to maximize profitability. Strategy 14: Distressed property investments. Distressed property investments involve acquiring properties that are in foreclosure, bankruptcy, or financial distress due to factors such as default, neglect, or abandonment. Investors can capitalize on distressed properties by purchasing them at below-market prices, renovating or rehabilitating them to improve their condition and marketability, and reselling them for a profit or converting them into income-generating assets. Strategy 15: International property investments. International property investments involve acquiring real estate assets in foreign countries to diversify investment portfolios, hedge against currency risk, and capitalize on growth opportunities in global markets. Investors should conduct thorough research on international markets, including economic indicators, legal frameworks, tax policies, and cultural considerations, to assess investment risks and opportunities effectively. In conclusion, there are a diverse range of property investment opportunities available in South Africa. Investors should explore and evaluate different strategies based on their financial goals, risk tolerance, and market outlook. Understanding the market into which you wish to venture as an investor requires a deep understanding of the marketplace. Our advice is to decide on a single strategy, get a mentor or financial advisor to guide you, and then just start. Thank you for being part of the EDPF Academy #1 Million Title Deeds project. We hope you will continue your journey to property ownership with us by registering for our Academy course at www.edpfacademy.app or visit our main site at www.edpf.co.ca for more information about EDPF.